Big profits, massive revenue, and glorious future projections. The past few weeks have been all about money matters for big tech giants. We're talking about the world's 5 biggest technology firms: Microsoft, Apple, Alphabet, Amazon, and Meta. Firms leading the world in terms of earnings and stock market valuations. These big tech firms have released their quarterly balance sheets, and billions of dollars in profits have been reported. Take a closer look at these numbers. In the first quarter of this year, Microsoft's profit climbed by 20% to more than $22 billion. Competing with it was rival Alphabet at $23 billion. Amazon's quarterly profit surged by a whopping 200% to $10 billion. Meanwhile, Meta's profit more than doubled in the last quarter. There was only one exception, Apple. The iPhone maker made less profits than last quarter. But nonetheless, Apple earned nearly $23 billion. But despite earning billions of dollars in profits, the big tech industry is in a disarray. Look at these headlines, for instance. In the past 3 months alone, there have been over 60,000 reported layoffs in the tech sector. From giant corporations to small startups, over 250 tech companies have fired employees en masse. These include the big tech firms. In January, Microsoft laid off 1,900 employees across its gaming division. Apple sacked close to 600 employees in April after reportedly abandoning its self-driving car project. Amazon and Alphabet also fired hundreds of workers across different business units. Meanwhile, Meta reportedly laid off at least 50 employees from its Messenger division. Most of the big tech job cuts were in sectors that were not performing or were expected to grow at a slower pace. For example, redundancies in Microsoft's gaming division came amid a slowdown in the sector. The video gaming sector has seen a slump after the pandemic. Meanwhile, Apple let go of its electric car ambitions as the sector's growth remained stalled. However, when the firm's profits are compared with the layoffs, an obvious question arises. Why are companies that are earning billions of dollars firing workers so rampantly? Analysts say there are 2 reasons for mass layoffs in the tech sector: cost cuts and the firm's transition to artificial intelligence. As the 2020 COVID-19 pandemic pushed the world indoors, demand for tech products like social media and e-commerce apps skyrocketed. To meet these demands, tech giants hired thousands of workers. By the end of 2023, the 5 tech companies, Microsoft, Apple, Meta, Google, and Amazon, had 71% more workers compared to the pre-pandemic period. However, the pandemic was followed by sky-high inflation across the world. People started cutting their expenditure on non-essential items. Online shopping habits drastically reduced. And as the outdoors began its pre-pandemic run, people were no longer spending hours scrolling on social media apps. And for big tech firms, less engagement meant less revenue. Fearing a decline in profits, tech firms resorted to massive cost-cutting plans. According to one piece of data, between 2021 and 2023, Meta, Amazon, Microsoft, Google, and Apple collectively laid off more than 100,000 workers. This helped the companies save on their costs and therefore enhance their bottom lines.
We've seen massive layoffs so far this year in the tech sector, and that was probably the catalyst for moving that Magnificent Seven stocks up last year. Was they were so beaten down, and then they all started to trim, and the trimming is continuing, and that's one way that I think you'll see going forward that the earnings will grow as they start to cut costs pretty dramatically.
Meanwhile, Wall Street now has a new obsession: artificial intelligence. Every other company wants to grow in the AI sector. From Meta to Microsoft, big tech firms are at the forefront of the AI race. They're rushing to integrate AI into their tech products, and for this, they've been hiring employees in fields like data science, software development, and cloud computing. In 2023, there were nearly 200,000 AI-related jobs in the United States. And now that AI has entered the job race, the threats of AI-powered job automation has also increased.
It's an open question to the degree to which they will have a similar experience and find new jobs. That said, the tech skill set, be it engineering or data science, is incredibly valuable. And so in some degree, we are seeing tech become a little bit less techy and traditional companies become a little bit more techy. So these tech workers are finding roles often in more traditional industries that they may not have considered otherwise. So in some ways, tech is becoming less exceptional and the rest of the economy is benefiting from this skills transfer.
Tech firms are now changing their growth paths. While they hire new talent in the artificial intelligence sector, companies are reducing workers in other parts of their business, and that has left thousands of workers threatened. As for those who've already been fired, social media is filled with their stories of struggle. As AI has become a shiny new moneymaker for big corporations, news of mass layoffs has become an everyday phenomenon. And employees in the tech sector are scrambling to adjust to this new reality. Amid massive cost cuts and a rising threat of artificial intelligence, tech employees face a double whammy despite the big tech firms clocking in handsome profits.
Firstpost reports from the world's second largest continent. Hello, I'm Alison Lagrange. A very warm welcome from Durban, South Africa. We get you the news and the newsmakers from Africa. South Africa goes to the polls on the 29th of May. I will track the election and bring you ground reports. Is it the end of the road for the African National Congress? And will former President Jacob Zuma stage a dramatic comeback? From elections to climate change to innovations and opportunities. As the world's attention shifts, we report from Africa, the heart of the global South. Join me every weekday live on Firstpost.